Hey YouTube, what's going on? Chris here. Want to bring you guys a little update on Bitcoin. And guys, this is what we've been talking about, this breakdown out of that triangle, and it's happening right now. So guys, if you could, like, subscribe, all that. And I do believe we got 200 likes on the last Bitcoin, guys. We're going to try to do it again. I greatly appreciate it. I'm also going to try to get back to all the comments today, especially the people who left me comments from the last video. I really appreciate it, guys. And I got a doctor's appointment today. Got a lot of stuff to do, so it's going to be very busy. I don't know how many videos I'm going to be able to get out today, but I'm going to try my best for you guys. And I wanted to start out with this Bitcoin video before I had to leave. So guys, we talked about the power of trend lines. We talked about the triangle. We talked about the move coming. There's going to be a break. And we talked about a potential break to the downside, and that's exactly what happened, guys. So last night I was actually in an Ethereum short, and I shorted it. I do believe, guys, I got in and it was like 113 or 14. Excuse me, and I shorted down to 105, and then I got out. And it was a nice little profit, but I could just see it coming, guys, and that was the reason why I jumped in it, is because once you learn these things and you see the trend and the trend's going down and you're having decreasing volume and you're seeing all this stuff happening, I put the trend in my favor and it ended up working out. Now, guys, like I said, I just play small positions because I'm still really trying to learn this stuff, but it's nice to be able to see that, you know what, guys, if I played a bigger position, I would have been correct and I would have made a decent profit off it. So always really pay attention to the patterns, pay attention to the candles, the trend line breaks, the RSI, all that different stuff, guys, and it can really tell you something. So what we have going on now, we had our breakout down from about about 35.64, guys, and now we're at that 34.22. Right in that range, and we definitely have a lot more room to fall potentially. Guys, we could come down here and double bottom. I know a lot of guys are looking at that around that 31.71, somewhere in there. That's really our best chances. If we can double bottom and have a lot of volume come in, that's going to be the biggest deal. And also, guys, I want you to put down low in the comments if you guys were trading at all. Did you guys short at all? Did you guys buy this after it did fall? Are you guys trying to catch a reaction? You guys let me know what you're doing down low in the comments. But what you're seeing here is this trend line has been broken, and here's our one-day candle, and now you can see the candle that we're forming here as we're having continuation from breaking out from this triangle down lower here. What we're going to pay attention to is the close today, guys. Say the close was to be exactly where it's at today. In my opinion, we would most likely for sure go down to that 31.77, and it happened fairly fast because, guys, there's still a lot of room to run. You can see on the 1 day here, our RSI is at 37, and we know that it can get even lower than that. It's been down to 9 before on the daily before we got a bounce. But as you can see, we did get a bounce. And that's what always happens, guys. So when you see that RSI really overextended, like I'll play a lot of this, I'll play a reaction on Ethereum. I just jumped back in an Ethereum long at like $101. And the reason why I did that, guys, is because the 4-hour RSI was down around 8 or 9, something like that, 9, 10. And what I'm trying to do is just catch a quick reaction and then get out. So that's where I'm playing a scalp. So just jumping in, trying to make a few percentage gains, and then I'm pulling my money out. And the reason why I'm doing that is because the trend is down, guys. But when you get that overextended to one side, sometimes you can jump in and you can do these scalps. So pay attention to that today, guys. This is going to be our support down here. Right there is where we're really going to watch. And then, guys, if we're going to be going up, what's going to happen is we're going to get back up in this triangle. We could even move another couple days up in this triangle if we close in it, and then we're going to test the top of this triangle again. But I really don't see that happening. The momentum is down right now, guys. Look at the RSI right now. Another thing we can do is, hey, I'm not going to enter a trade, especially going long, until I see that broken, and we break that to the upside. So that's something we're going to want to look for as well. But always put the trend in your favor, guys. And you just see this. The trend has just been down. We've been creating these lower highs, lower highs, lower highs, and that's what we're going to look at next. We're going to step back and we're going to look at these lower highs, and we're going to see when potentially, maybe, guys, we could set a higher high and what it could look like. So let's clear that off. We're really going to step back here. And let's count them as well, guys. All right. So we have a lower high here, lower high, 2, 3, 4, 5, 6, 7. That long wick. Remember when everyone thought the bull run was coming in? 7. We'll even call that 8, 9, 10, 11. And you can see, guys, we have not made a higher high. And these lower highs just keep coming and coming and coming. Now we have got a higher low, which has been put in, which is good, but guys are waiting to see that higher high. We need to get back up above this 4,300. If we could get somewhere in here and set a high, come back, set a higher low, and then make an attempt up here at that $6,000 where we're going to have just a ton of resistance in here. And that's what people need to pay attention to, is that this resistance is going to be very, very strong up there. Now, if we break that on good volume, guys, that could be the start of the bull market. We get back up above this 200 here, 200-day moving average, and we break this resistance. I really believe that would be the start of the bull market. But that's a lot of work that has to happen, because when we're just looking at this here, excuse me, guys, we do have our higher lows that have been forming, but you see the highs have just, these lower highs have just been coming in and coming in. And then I'll also take a look at the volume here. We said the volume, until we had this break, would just keep decreasing. And basically, guys, this is where we had it yesterday. Now you can see this bearish volume is breaking out to the upside. And that's what you're going to have. As these moves happen, when we move sideways, you're going to have that constricting, and the candles are going to be really small, those short day candles. And then, since the liquidity is so low, as soon as one of these whales comes in, either to the upside or downside, it can, that's why they're called market makers. They can move this wherever they want. A big whale could have came in while we were moving sideways last night and said, we're going to blast this to the upside, and a lot of guys could jump on that. So that's why they're called market makers, is because they're going to push it the way that they want to. And a lot of institutions want to continue to pick this up very cheap, so that when the next cycle happens, guys, they're getting it dirt cheap. You know, you're able to pick up Ethereum for under $100 when it was at one time $1,400, and people were willing to pay that. You know, you're able to pick up Bitcoin for $3,200, let's say that, when it's been over $20,000. So we have to think about that, and we have to remember that market cycles are all about psychology and the human behavior. If we woke up tomorrow and all of a sudden some billions got put in, you'd think about the cryptocurrency market completely different than you did the night before when you went to bed. And that's just what it is, guys. It's all psychology. And as soon as you see the whales really jumping back into the long side, things could get very interesting. But right now, guys, the trend is down, and you have to realize that we're below the 50 moving average, we're below the 20 EMA, and we're below the 100 and the 200 moving average, and all those are acting as overhead resistance. So do you see those right there, just cascading down upon us? So until we close up above even the 50 or the 20, which first we'll start with the 20 EMA, and then we would move to the 50. But guys, we're not even, you can see that they're just hammering down upon us. And our best bet here is, even say this candle came back up, we would probably wick through this like you see here. Do you see all these wicks that went through the 20? And then you just get pushed back down to the downside. Look at this candle here. It was like a shooting star at the top there that wicked through. And then we had a bearish engulfing candle, which was another sign there. And now we're getting driven to the downside. And guys, these candles are just so crucial. Pay attention to this. Look, shooting star candle, bearish engulfing candle, we went down. Then we had a bullish engulfing candle right here, and we got pushed to the upside. And another thing you really want to look at is the Fibonacci. So with the fib here at the bottom, guys, we can look at the overall move, what we've made here, and what we've lost. So we just lost the 0.618, which in my opinion is a huge deal, because the bots were trying to defend the 0.618 for a long time here. For 5 or 6 days, we were just moving sideways trying to hold this. And here, guys, let's get a different color on here for you, so you can see. There you go. So this 0.618 here, if we were going to make a move to the upside, this would have been held, and we would have made a move on volume, most likely up to the 382 around this area, and this big cluster around 3,900. We would have had the 0.382 and then all this resistance. And guys, if we made it past that, it would have been to the 0.236, around 3,984. But now what we're looking for is, can we hold support off the 0.786 here, or are we just going to bust right through that and start falling down? So guys, that's what I'm looking at right now. The candle that is forming, if it were to stop right there, is a bearish belt hold candle. So we want to keep that in mind, that this is a pretty nasty candle that's forming here. And what you want to pay attention to is the close. If the close is lower than what this close was, most likely we're going to continue to go to the downside unless we just have some complete market manipulation. So guys, that's what I wanted to look at with you. We're going to do just a couple more things. We're going to take a quick look at the MACD, maybe the Bollinger Bands here. But most of the stuff that I wanted to talk about, we got out. But this was the break that I was saying. There's so many people saying, oh, you know, people are putting out videos. There's going to be a break. There's going to be a break. And yeah, there's going to be a break, guys. Whenever we get in that tight pattern like that, we're going to have a break. It's either going to be to the upside or downside. And that's what guys are waiting for. That's what you play. And we're also in that descending triangle that was forming. So guys, right here, and you can see the MACD's rolling over too. We started to have that histogram tick to the positive, and now we're just starting to go back down. We kissed that line. Remember how we talked about that before when we were marking off bullish and bearish things? We put this in the bullish camp, and now we have to put it in the bearish camp because we did not get that cross with follow through. We kissed the signal line, and then we fell back down. So, you know, guys, there's a lot pointing to the downside right now. And then let's check out our Bollinger Bands. You'll see those starting too. So right here, guys, we had that contraction, and now they're going to start opening up more if this fall continues like that. So they will just close. They'll get real tight when we have those small day candles, those little candles. Then they'll expand on those long day candles like this one here. So, guys, I want to know what you're doing. Please put it down low, but factor all these things in. Just say, you know, where's overhead resistance? And that's how I like to start, guys, you know, and this is how you build your chart. So you'd say overhead resistance right here. Where's our support? And then we go from there. This is the channel that we're working in, and we're going to see if we get a bounce off this lower line here around that 31 or so. But you start with support and resistance, then you do your trend lines, guys, and then you can put in your Fibonacci, look at the candles, look at the volume, look at all that type of stuff. But, you know, these moves can happen very, very fast, and that's why I try to get these videos out to you the best I can, is because I want people to realize that a move is coming in, to be prepared, whether it be, hey, you know, there's going to be a huge fall, and I'm going to buy the reaction. And I know to buy the reaction, but I know to also get out. You see like how this fall was? Here, guys, people bought this down in here, and then they just played this reaction, then they got out at that doji candle. So there's definitely a purpose to playing reactions and stuff, but you want to be a little bit more experienced when you do that, and you have to know that you want to get rid of it, that it's just a short-term temporary thing. But the way the trend's been down, guys, so congratulations to all the people who did some shorting last night. And guys, just keep learning. Thank you for all the comments. I'll try to get back to the comments the best that I can today. And we'll just keep grinding. Keep it up, guys. God bless each and every one of you.